Hey everyone, how's it going? It's Robbie Moreno, your local real estate San Antonio agent, here with one of my lenders, Edward Hernandez. I just really wanted to make a video for the public. I've had a lot of questions come up, just overall the general of how's the market going, the way what's trending, and how is it that you can get approved. So I brought one of the experts. That way we can kind of go a little bit further into it and answer some questions that I had some people ask me. So,
Awesome.
real quick, Ed, if you want to go ahead and just do a quick
Hey.
introduction about yourself.
So Robbie introduced me. My name's Eddie Hernandez. My name's Edward Hernandez, but I go by Eddie. Thrive Mortgage here. I'm a local lender in San Antonio, and me and Robbie do quite a bit of business together, and I help answer all the questions that he might have about what it takes to get qualified and what the market looks like as far as mortgages go. So, and he's got a couple questions for me that I'm gonna do my best to answer. So that you can be informed and on making your purchase or how to start.
All right, awesome. So, first question that I have for you, Ed, is I've been asked by a lot of people, what are your current rates right now? Just because from what we've seen on news and from articles, it's always up and down. When it comes down to rates. But what you're coming across, what are the rates?
Yeah. So, what are the rates is a question that we as lenders get asked quite often, and it's kind of a difficult question to ask, to answer if we haven't started the process. So, I do get people asking me all the time, what are the rates? What are your rates? Those are the two questions that I get when it comes to interest rate, kind of right in the beginning. There's so many variables when when you're talking about interest rate that play into it. There's loan types. There's USDA, there's VA, there's FHA, there's conventional, and all of these loan types are going to carry different interest rates.
Okay.
Obviously, there's other factors that play into it. Credit, um, loan term. Are we doing 15, 20, 30 years? Down payment amount, and then purchase price.
Okay.
So all these factors and a few other factors as well are all tied into what the interest rate is.
Okay.
So typically, when someone asks me what are the rates, I usually quote a range,
Okay.
because there's no way to know what the rate is for that person until we've done a full application, until we've looked at credit, until we've looked at income, until we looked at the price point, the down payment, and there's a lot of factors that go into what is the rate.
Okay.
And so typically I quote an average, kind of a middle point,
Okay.
and then after I've had a phone interview or talked to them, then we can figure out what their actual interest rate's going to be. Interest rates do change, and in this climate, they've been moving up or down
Okay.
quickly.
Yeah, for sure.
So today's rate is not tomorrow's rate all the time. While rates have been steadily increasing, for the most part, you can go a couple days with the rates not changing too much, depending on, again, what's going on, other external factors. But yeah, to answer the question, what are rates? I'm always going to quote an average,
Okay.
because I don't know what loan type is going to work best for your situation, and all the intricate details. And so I try to have my borrowers, your clients, rate is, while it is important, it doesn't make as big a difference as we're led to believe as consumers, because we see Facebook, we see our family, our friends, we see commercials, we see all this talk about interest rate, when the difference between let's say a 5.5% and a 5.625% in most cases is not huge.
It's not a make or break deal. Pretty
$15 a month maybe.
Okay.
And so we as consumers, myself included, have been trained to, what's the interest rate? Oftentimes taxes make a far bigger difference than the insurance. A house that has a $5,000 a month, a year tax rate versus a $8,500 a year tax rate is going to have a huge difference in payment.
Yeah, for sure, I could see that.
Versus 5.5 and 5.625, so minuscule differences. And so yeah, that's usually how I answer.
Okay.
What are the rates?
Again, it's just pretty much broken down. It's a case by case scenario.
Sure.
It's kind of like a fingerprint.
Yeah.
I guess you would say everybody's different.
Everyone is going to be different.
Okay.
Every situation, and my job and Robbie's job is to make sure that you get the rate and loan type that works best for your situation.
Okay. All right. Awesome.
That's always the goal.
Next one that I have is are they planning on going up or down the rates?
Rates. Are they planning on going up or down? While we cannot predict the future with 100% accuracy, we do expect rates to go up.
Okay.
Everyone's watching the news and they hear the Fed is increasing rates.
Yeah, I've been hearing that a lot.
And so, everyone hears the Fed's going to increase rates. The Fed's going to increase rates.
Mm-hmm.
It's been the topic, and so we know that the Fed is going to continue to increase rates through the end of the year and possibly into next year. When the Fed increases the rates, those rates don't directly correlate if they increase the rate by 0.75
Okay.
to the mortgage rate going up 0.75. Does it make our rates go up? Yes.
Okay.
Um,
But it's not gonna go up. Like for
Not
example,
point
it
for
went up by
point.
0.75 a week ago or two.
right. So we had a huge spike, one of the biggest since I think '94.
Okay.
0.75 basis points increase. The effect on mortgage rates was about 0.55.
Okay. So it's not the full 0.75.
Not always.
Okay.
But do we see rates going up? Yes, for sure.
Okay.
That's what we believe is going to happen.
And what do you think the reason? Like, is it just overall to stop with the inflation of these
Yeah,
prices
so,
that are rising?
Without I'm no economist, but without getting into like specific details, the reason the Fed is increasing rates is to stop inflation.
Okay.
And so we just had our last inflation report, and inflation increased, and so the Fed increased rates. So the Fed's going to continue to increase rates
Okay.
until inflation stops or starts to trend downwards.
Okay.
And as those numbers, as inflation starts to trend downwards, then we'll see rates start to level out
Okay.
and stop increasing. And so that's kind of what we see rates doing, and that's what we that's our guess or our guesstimation
Okay.
of what rates are going to do.
So as far as like, I know a lot of people got spoiled with
Sure.
the COVID rates.
Yeah.
And so I've been asked, is that 2% interest rate ever gonna come back, or what's the deal? What do you think?
So, talking to some people who have been in mortgage for far longer than I have,
Yeah.
I reach out to people that have been around it for a long
Yeah, pick their
time.
brains.
Yeah. And I was talking to one of my regional directors and asking him, what do you think about rates and this and that?
Mhm.
And so traditionally, the rate trends were on a 5-year cycle.
Okay.
So 5-year uptrends, 5-year downtrends, 5-year uptrends.
Okay.
So if history repeats itself, then we see a 5-year uptrend and then a 5-year downtrend. Does that mean we'll see those historic lows of 2.5 again? I wouldn't plan on it. I
Okay.
wouldn't base your home purchase on it.
Okay.
But you can always take today's rate, and if rates go down, you can refinance and get those rates.
Okay. Okay. Awesome.
Yeah.
Next question that I have for you is a big question that everybody wants to know. From your professional opinion, is the market, San Antonio housing market, is that gonna crash?
San Antonio, this is not
Yeah,
just
we're
my
not
opinion.
gonna hold you to it. Yeah.
And it's not just my opinion.
Okay.
But again, I talk to people who have been around far longer. I talk to real estate agents and ask them, hey, you've been doing this for a long time. What do you think? But it's pretty easy to, in my opinion, to predict whether we're going to see a crash or not.
Mhm.
And there's several factors that point me to believe that we don't see a crash. Reason number one is it's a lot harder to get a mortgage now than it was back when the mortgage crisis
Yeah,
happened.
back 08, 09.
Right.
era.
I wasn't doing loans at that time, but
Yeah.
from what I hear, it was very, very simple to get a loan.
Mhm.
They were doing loans where you could state your income and no one verified it. You didn't have to turn in pay stubs or anything like that. And so Now the standards are a lot higher. So that's number one, right?
Okay.
Loans were a lot more difficult to get. Not more difficult. There's a lot more qualifications that get checked.
Okay.
We verify a lot more now. So
That's good.
that's number one. Number two is San Antonio is not supported by one industry specifically. So we're not expected to lose a company or an industry that supports the whole city or even the surrounding cities. We've got several big companies here locally. In San Antonio,
Yeah.
Austin, New Braunfels, Tesla is there. I think Microsoft might be in Austin as well.
Yeah.
We've got
Your
Whataburger,
Facebook,
we've got
everybody.
USAA, Valero. We've got several large corporations that are officed out of San Antonio and the surrounding areas, and it's very unlikely that we lose. Not the military as well.
Yeah.
So that would be reason number two. Is our city is not supported by one industry or one employer specifically.
Okay.
And the other thing is, it's pretty inexpensive still
Yeah,
by
it is.
nation standards to purchase a home in San Antonio. So, in my opinion, our prices are just now starting to catch up with the rest of the nation. I still don't think that we have anywhere near peaked. And so, kind of going back, are we going to see a crash? I don't think we see a crash. I think we see prices
Just normalize.
normalize,
Yeah.
level out, and continue to increase slower,
Okay.
maybe slowly, but not crash. We're not getting a crash.
Okay. All right. Awesome.
Don't
awesome.
base purchasing on a crash.
Okay, nice. And then as far as I've had a couple clients ask me, is it better to wait to buy or with the rates, because again, most people right now they see what the rate is and they're like, you know what, I'm gonna just kind of get off the gas and wait for it to go back lower.
Right, and I get this quite a bit, and this is actually one of my biggest selling points with clients that come to me to purchase is that I can have this conversation with them and explain to them why it's good to buy today, buy now, and so it's an easy conversation. They always ask me, well, we know interest rates are high, so while we want to get pre-qualified, we may or may not move forward with it right now. So the conversation goes like this. So you want to wait however long it is, 6 months, a year, 2 years, for interest rates to come down or prices to come down, which we don't expect.
Mm-hmm.
They're going to move sideways or go up, most likely up.
Okay.
I think I looked at some data, and I think there was over the past 20 years in San Antonio, homes have only gone down in value twice, and the year after the values went down, which was only a small percentage, I think it was 4%, it went up double the amount that it went
so,
down.
Yeah.
So made up
Took
for the
account
previous
that,
year. And so when someone asks me, should I buy now or should I wait because of the interest rates, you can purchase now and lock in today's price,
Yeah.
and also lock in the appreciation over the course of the next 1 to 5 years
Yeah.
when you own the home, or depending on how long you own it, whether it be 20, 30 years, the home is going to continue to appreciate. Where if you waited to purchase because of interest rates or whatever it is, you don't get that appreciation. And so, yeah, I do quite a bit of math with them. If you're paying, let's say, for simplicity, 5%, and your home is going to appreciate, last year I think was 17%.
Yeah.
Let's say, let's cut that way down. Let's say it appreciates 5%. Well, you're gaining 5%, and that's going to negate some of the interest that you're paying in the appreciation. And then when rates go back down, you can just refinance.
Yeah.
So now is the best time because it's not going to get any less expensive.
Okay.
Now is the best time.
Yeah, because I've always said, you can always refinance a rate,
Yeah.
but you can't refinance the price of a home.
Cannot refinance the price, and prices are not going to go down.
Mhm.
I mean, think back the last 10 years, where new homes prices have just continued to go up.
Yeah.
They're not going back down. So yeah, now is the time for sure.
Okay, awesome. And another question is, do they still offer down payment assistance or any type of program like that?
Yeah. So down payment assistance is is an area where I guess there's a lot of to me it seems like there's a lot of mystery around it.
Okay.
And so when I get clients coming to me asking about down payment assistance, I have to do a lot of explaining so that we can understand how down payment assistance works, where it comes from, what are the benefits and the pluses and minuses of down payment assistance. So yes, there are down payment assistance programs available still.
Okay.
With the interest rates moving as fast as they have, sometimes on a day-to-day basis, the percentage of down payment assistance you can get changes.
Okay.
So for the last, let's say, year or so, anywhere from 3% to 5% down payment assistance has always been available. So 3% is 3% of the loan amount. So every $100,000 you borrow, you could get $3,000,
Okay.
or up to $5,000, 3 to 5%.
Okay.
For the last year or so. Now, recently, since rates have been moving so fast, when we go to the websites for the programs to see what's being offered today, oftentimes the 5% and the 4% option are not available.
Oh wow. Okay.
They've even brought in a 2% option,
Which was never heard of before.
which it hadn't been a thing at least for the last year and a half.
Okay.
It was always 3, 4, or 5%.
Okay.
Now they're even offering 2%.
Wow.
And so yeah, down payment assistance is available. The money doesn't come from the lender. It comes from the down payment assistance program, which is often offered by a city or the state.
Okay.
And so there's several different programs that might work for your specific situation. Again, it's going to be a specific situation, and we'll say this is the best program because.
Okay.
And then I go into, this is what the rate looks like at X amount of dollars towards your down payment and closing costs and whatnot. But yes, there are down payment assistance programs available. That in some cases is not the best program for the borrower, but it is a conversation that I have with them.
Just
and
in case. I'm
yeah,
really curious.
all the time, yeah. And I like to talk to them, and if we can do it with or without, that's a decision that I let them decide once I've educated them on what down payment assistance looks like for their situation.
Sweet. Okay. And then last question that I have for you, Ed. So as far as somebody that is interested in purchasing a home, what do you have? What do you need to be qualified, or what steps do you need to take in order to get approved?
So again, with talking to a lot of prospective borrowers or people who want to purchase, they always want to know what do we got to do to get qualified. And one of the biggest things is not everyone, a large percentage of borrowers are afraid to pull credit.
Yeah.
Because they think that, it's going to hurt my
drop
credit.
like 100 points.
It's going to hurt our credit. I don't want to pull my credit to figure out if I'm pre-qualified. Well,
Yeah.
we can't pre-qualify
How are you gonna know?
if we don't see credit.
Yeah.
And so so one of the things that I tell my clients is, the whole don't pull your credit is kind of antiquated. It was an old sales tactic that was used because once I pulled your credit back in the day, once I pulled your credit and I said, hey, don't go pull your credit anywhere else, because then it's going to mess up your credit, and I don't want you to lose this deal. Well, they couldn't go buy somewhere else if they didn't pull credit. And so it was kind of an old sales tactic. And so it's been ingrained in us over the years. Don't go pull credit. Don't go pull credit. We pull. I have applicants that have applied with several different lenders. And the scores across the board, even if they've applied with 3 and 4 other lenders, are identical within a very short period of time. And so.
Because what's the max that you can run it without affecting you big time?
It's I've heard, and I don't have a solid answer for that.
Okay.
I've asked people who are very experienced, who have been around, and the number varies from 30 days you can pull your credit, 45 days you can pull your credit unaffected. I have seen within about the first 30 days, pulling your credit anywhere from 3 to 5 times does not affect your score. And if it does, we're talking a very small amount, 2 to 4 points. And 2 to 4 points is not going to make the difference of getting qualified or not qualified. or it's not going to make a huge difference in your interest rate if it makes any difference.
Okay.
And so, step number one is don't be afraid to pull credit. So, in order to get you pre-qualified, we have to pull credit. We have to get a full application on you. We want to see pay stubs, at least the last 2 pay stubs. We want to see a bank statement.
How far back bank statement?
We want to see at least the last 2,
Okay.
because we want to see if there's any large deposits. We want to be able to kind of track where funds came from and make sure that those funds are going to be usable towards the loan.
Okay.
So last two bank statements. So employment, bank statements, and fill out an application which has a bunch of questions in there.
Okay.
Most applications can be filled out online. They take 10 to 15 minutes.
So not that long. Okay.
It's not a long process at all. Super quick. It's all information you already know.
Okay.
And so you'll fill out the application. You'll send over 2 pay stubs, 2 bank statements, and in a relatively short period of time, let's say 1 to 3 days, depending on how long it takes to get your documents in, we can qualify you.
Okay.
If you send in bank statements and pay stubs right away,
Yeah.
we can qualify you within an hour. It's
Nice.
quick.
Okay. Because once you get that out of the way, then at that point, you know your buying power and you
Right.
can start shopping.
Exactly. And so the goal is to get you a very good number
Mhm.
of what you can purchase, and what payment that price is.
That you're comfortable with and
right.
everything. Okay.
And so we can figure out, so you're out there shopping with deadly accuracy on what price point you're looking at to get you into your comfortable payment range, to make sure that you have the cash to close. Are we using down payment assistance? All this information gets put together after you've submitted an application, which takes 10 minutes or so. You can do it right from your phone in most cases.
Okay.
Yeah.
Nice. Okay. Awesome. Well, that's it with the questions. I
Yeah.
appreciate it. Thanks for the insight.
Yeah,
Again,
no,
coming
thank
from
you.
a professional that does this for a living, just wanted to share this information with you guys, the public. If any other questions, contact me. I'll get you connected with Eddie here.
Yeah.
And got any last words?
My last words are, purchasing a home is one of the number one ways to build wealth. And so waiting because of interest rates or prices, or because the internet said to wait or Facebook said to wait, it's not a good idea. And waiting doesn't improve our situation. If we're not looking to purchase a home for the next 1 or 2 years,
Mhm.
I always recommend starting now, because one of 2 things is going to happen. One, we're either ready today and we know, hey, in a year from now, I'm still going to be ready,
Mhm.
and we can improve our position between today and that year. Or if you're not ready, we can at least start working on getting ready, because oftentimes it does take time. And then when you're ready in a year, you'll be able to get qualified. And so waiting is one of the worst things you can do as far as purchasing a home. So, yeah.
All right, guys. Well, until next time, you guys have a great day. I will talk to you soon.